Welcome back, everyone, to The Deep Dive. Today, we're diving into a pretty significant event that's been dominating the headlines, something that's probably caught your attention as well, the huge two-day sell-off we saw on Wall Street.
Yeah, a major market event, and we're going to unpack it all for you today using some really insightful source material.
Right, and one of the most striking things that jumps out from these sources is the sheer scale of this sell-off. We're talking trillions with a T.
You got it, over $6 trillion in market value wiped out in just 48 hours.
It's almost hard to even wrap your head around a number that big, right? I mean, 6 trillion.
Absolutely, and that alone signals just how significant this event really is. And what's even more noteworthy, the sources really drive this point home. The sell-off is being directly linked to Trump's tariffs.
That seems to be the main narrative emerging, and it's something we're going to dig into. These trade policies are being pinpointed as a major catalyst, a potential trigger for this dramatic downturn, something you'll see very clearly in the material we've got. And just to add a bit more context here, this wasn't just a random blip on the radar, right? This two-day plunge actually marked the end of the worst week for the market since 2020. When you think about that time frame, it really kind of puts things into perspective.
For sure. 2020, I mean, that was a year of unprecedented economic volatility, right? And the fact that this recent sell-off concluded such a negative week, well, it really points to a broader underlying nervousness in the market.
So the tariffs, they might be acting as a trigger, or maybe a key contributing factor to an already jittery investment climate.
Our sources really seem to agree on that point.
All of this brings us to, well, what's probably on a lot of your minds right now, recession fears. When you see this kind of massive wealth just disappearing from Wall Street, over $6 trillion gone like that, it's understandable to feel a bit anxious, isn't it?
It definitely is. And major market drops like the one we've just witnessed, they often reflect deeper concerns among investors about future economic growth. When that much value evaporates so rapidly, it can erode confidence pretty quickly.
Confidence among businesses, consumers.
And that reduced confidence, it can then lead to decreased spending, less investment, which, as we know, are the engines of a healthy economy.
Right, the fuel that keeps things running smoothly. So in this deep dive today, that's really what we want to unpack for you, the core connection between the tariffs and this huge multi-trillion-dollar market reaction. We want to explore the potential implications for the wider economy and those recession worries that you're hearing about.
Exactly. We'll delve into some of the key mechanisms at play here, based on what our sources are telling us. How do tariffs translate into such a rapid and significant negative response from Wall Street? What are the economic principles that link trade policy to how the market values companies?
Okay, so let's break this down. Tariffs, at their core, are essentially taxes on imported goods. How does that directly translate into a $6 trillion loss? Because at first glance, it seems like a pretty big leap.
Well, it all comes down to the ripple effects. The sources detail how these tariffs can significantly increase costs for businesses, especially those that rely heavily on imported materials for their production, for their supply chain.
Right, increased costs make sense.
And when costs go up, profit margins get squeezed,
leading to potentially lower earnings in the future.
Precisely. And a lot of these businesses, they're publicly traded companies. Investors, anticipating these lower profits down the line, they might start selling off their shares, right? And when that happens on a large scale,
you see stock prices dropping across the board, and the overall market capitalization takes a hit.
It's a chain reaction, and the sheer size of this recent sell-off, well, it strongly suggests that investors are really taking these tariff implications very, very seriously.
So it's like a domino effect. Tariffs potentially increase costs for businesses. Those businesses might make less money. Investors get spooked, start selling, and the whole market feels the impact. And $6 trillion, that's a huge amount of value to just disappear, which makes it even more significant, right?
It does. It really underscores the level of concern that's out there. Investors are worried about the impact these tariffs could have on corporate profits, which can ultimately affect the broader economic outlook for everyone. It's like a big flashing warning sign.
And it's all happening against the backdrop of the worst week for the market since 2020, which, as you mentioned earlier, brings back memories of a lot of economic uncertainty. It's a comparison that's hard to ignore, isn't it?
It really is, and our sources make that connection as well. That comparison to 2020, it highlights just how severe this market reaction has been. Investors seem to be viewing the current situation with tariffs as a central element as posing a pretty significant threat to economic stability. It's almost like an echo of those volatile early days of the pandemic.
So what does all of this mean for the average person out there, especially in the context of these growing recession fears that we're hearing so much about? I mean, does a market sell-off of this magnitude automatically signal that a recession is inevitable?
Well, not necessarily automatically. However, it's definitely a strong warning sign. A significant and prolonged downturn in the stock market, it can definitely trigger a decline in confidence among consumers and businesses, leading to reduced spending and investment.
Which are, as we've discussed, key drivers of economic growth.
Exactly. So while a market sell-off like this isn't a direct cause of a recession, it's definitely a factor that increases the risk. It's something we all need to be aware of and pay attention to.
It feels like the market, based on what our sources are saying, is sending a pretty clear message here. There are serious concerns about these tariffs and their potential to negatively impact the economy as a whole, and that includes all of us.
I think that's a fair assessment. The sheer scale of this sell-off tells us that investors believe these tariffs could have some major consequences for company earnings, for the economic landscape in general, and that's why we're seeing these anxieties about a potential recession growing.
So just to quickly recap what we've covered in this deep dive today, we've looked at this significant market event.
And the key takeaway from our sources is this direct link between that massive two-day loss, over $6 trillion, and the implementation of Trump's tariffs. The sell-off has really amplified existing economic uncertainty, fueled those recession fears, and to put it in context, it's been the worst week for the market since 2020.
It's a stark reminder for everyone that decisions about global trade policies, they can have very real and immediate consequences, and those consequences, they can be felt on Main Street just as much as Wall Street.
Absolutely, and a $6 trillion loss in just 2 days, that's not something to be dismissed lightly. It underscores just how sensitive the markets are to these kinds of trade policy decisions that can ultimately have an impact on your financial well-being as well.
It's definitely something to think about. And on that note, here's a final thought for you all to consider. How might these massive shifts in the financial markets, even if you don't directly invest in stocks or bonds, eventually trickle down and affect your everyday life, your own personal finances? It's a question worth pondering as you go about your day. Thanks for taking this deep dive with us. We'll see you next time.